talk about the markets real quick right ahead of the open, and let's talk about the numbers. I'll be right back with your info for the market today. Awesome. Thanks for coming on, folks.
You're watching Famous Dave on YouTube.
Markets off session lows as we come into this trading morning on a Thursday with the numbers out. Yeah, it was looking a little ugly there overnight. Let's take a look quickly at what we've got on the charts here for you right at the moment. But we are off the lows, but just crazy activity, all gyrating activity in the Nasdaq yesterday. And really, I'm watching Tesla because when you see Tesla start to break to the downside, it kind of makes you hesitant to buy stuff. And we know Tesla now is not a huge component. I mean, it's a pretty big component. I think it's like 2.6% of the Qs, but you know, Apple and these other stocks really keep a close eye on them. Apple down $3 currently. We did have a little pop in vol yesterday, but you know, if you've been following this stuff closely, it's very hard to be short the market because stuff just rallies with a vengeance. Case in point, Lululemon yesterday. Lululemon, initially in the morning, it sold off, and then it was rallying with, like, you know, the market was up slightly and Lululemon would pop up. I mean, it rallied, what, $7 into the close from the low of around 304 and change yesterday. So really tough to play anything because stuff is just moving around like crazy. The Nasdaq also having these just, at one point it was up 100 yesterday, and just in like 1 minute, all of a sudden it was unched. It just had this big down move out of nowhere just in the middle of the day. It just went boom. But then rallying back, but we can see this trend starting to be sort of a downtrend. Also in Tesla, my friends, we are seeing Tesla off the highs now. Remember, it got up to, there you see that 1794, and has been kind of struggling to tread water since then. So let's keep an eye on that. The VIX, really not convinced that we're in a big sell-off here. You can see the VIX just kind of like, it's up 93 cents here, but not really raging that you could think of in any way. We did see VVIX, I believe it was up on the day a little bit yesterday. You did see it kind of catch a little bit of a bid, which was interesting to me, but it really feels like volatility is not reflecting the actual risk out here in the marketplace. The thing is that you know, certain stuff is moving around, but then it comes back to where it was before. And I don't think the VIX is really taking into account the actual elevated risk that we are at this point. We certainly see the bad news continue to flow on coronavirus, and the president's approval ratings continue to go downhill. And we're getting closer to the election, so we'll see what happens with that. I am very bearish, and I'm trying to find creative and careful ways to short this market because, once again, just coming in and picking your favorite stock and shorting it or buying puts, you are liable to get very, very run over. But I really do believe that there's going to be a certain point here where the market goes down and just doesn't come back. And I believe we're approaching that point now. So, you know, you get burned a couple times being short this stuff, and it rips your head off to the upside. But my fear is that then you get complacent and you're like, oh, that doesn't work, shorting this stuff. And then the one time that you're not in there, it's just off to the races to the downside. And I really feel like that has the potential of happening soon now. So I'm very careful. I don't really want to sell volatility here. The 28 VIX seems justified and seems like we could move higher from here, and that we might catch a better opportunity to jump on the short VIX trade. As I said previously, we are off the lows here. You can see right now Nasdaq down 108 with the E-minis down 18. We were down almost 200 at one point. So we have come off the lows. Let's take a look here and see what it says about the jobless claims. So jobless claims, it says jobless claims rise by more than 1 million. So jobless claims disappoint. Retail sales boom, it says in this article. So let's take a look here. Turn off your ad blocker. Oh, yes. So, it's very hard with economic data these days because you can get a really bad, there's been so much bad data where the market's just rallied off it. It really, in the best of times, market data isn't all that meaningful, but right now it's just very, very hard to figure out what it means. Even if you had the number ahead of time, it's hard to figure out what this all means. I did see in the news after we had JP Morgan good earnings yesterday morning. Now we saw, or 2 days ago, now we saw Bank of America talking about a charge off. We're going to see this a lot from banks, I believe, moving forward here, where they're anticipating, you've heard on the news, of course, the people not paying their mortgages and defaulting. And so banks are trying to get out ahead of this by setting aside money for losses ahead of time. And we saw Bank of America do that, and the market punished them for doing that. But I would not be surprised if in other cases the market rallies based on this information, because it's kind of like the banks kind of trying to get ahead of the situation and take care of business. There was some negative Tesla reports yesterday saying that the estimates of sales are actually lower than we thought it was going to be. And, if Tesla goes down, everybody's going to say, I sold you so. But in the meantime, it's very hard to short Tesla. It's just impossible. Here's a Tesla Motley Fool article. And I'm not a huge fan of Motley Fool, just to put it out there. And this is from July 15th, which would be yesterday, talking about Tesla having 50% upside. Now, of course, we have seen like a 500% gain in Tesla from the low. It was down to, what was it, 345 maybe? Let's take a look. I do use Thinkorswim for my main platform for looking at charts and whatnot. I do highly recommend Thinkorswim as a great platform. So it got down to 360, 370. And I remember down here, it got back to 400, and I was like, maybe I'll sell some like of the 450 calls. It's a good thing I didn't. Look at this move here. Boom. And, it seems so obvious now that we should have sold at 1794, but at the time it was like very hard to do because people were saying, it's going to double from here and stuff like that. And it takes a lot to jump in there and take a stand in a stock like this that can run you over. And this could turn around today and go right back up through there. So very hard to call. I do remember during this last down move here in Tesla, it seemed to me like I was frustrated because I had been shorted during this period before here and it hadn't worked. And then I just watched it go straight down without participating at all. And that's frustrating, but sometimes you just got to lay off because, I've been burned too many times in Tesla. The key here is to, of course, keep alive, keep the money in your account and stay in the game, because there are going to be great opportunities out there. And if you have cash on hand in your account and you're ready to go, you can take advantage of those opportunities. And anybody who's been trading for a little while knows what I'm talking about. A trade will show up and it just seems like a perfect, obvious trade, and you put it on and you make money. And the difficult thing is being patient and waiting for those moments to occur. But, I've been thinking this whole, the last month, occupied in my thoughts is like, one of these days this market is really going to sell off, and I'm going to just sell some stuff as it starts going down and capitalize on that sell off. And I've been kind of obsessed with this thing for a while, and I know people get in these modes, and I'm I've always been one who's critical of market bears, because it seems like there's always these bears out there, these like Peter Schiff guys who are like, you got to buy gold, the market's crashing. These guys have been there forever, and frankly, they have more views on YouTube than I do, and because people for some reason love the idea of a disaster. They love watching somebody crash and burn. And so you make a video that's very negative and say the market's going to zero. People love that for some reason. Usually my videos were like, my prediction is the market's going to slowly go up. And that's not as exciting, but it turns out to be true a lot of the time. But the last couple of months, no, I'm super, super bearish all the time. And I'm just like, it feels like that this is a house of cards. Doesn't make sense to me why the market's always just rallying while the economy is not doing well. And I've been told by millennials and younger people than me, your old school, old way of thinking, this market, that's the old way of doing things. We're going to keep rallying, and this is just the beginning of a rally and everything. But I can't get out of my head that it just doesn't make sense. Why should things in the market be way better now than they were before this whole crisis kicked in? And meanwhile, we've got people, a lot of schools are not going to open in the fall. We've got people who are in crisis. There's obviously bad stuff happening to people on an individual level that's not even really covered out there. I suspect that in Florida, the counts for all this stuff are probably lower than they actually are, because it's the people in power there have made it very clear that they are not on board with protecting against this virus thing, and they think it's a hoax and all that stuff. So even if you take the most conservative point of view, it doesn't make sense that the market should be way better now than it was before the start of all these problems. And so I just can't seem to get that out of my head. I know I keep droning on about it. As usual, we keep an eye on the VIX. The VIX has stayed in a tight contango form, which means it's pretty much of a bullish thing, I think, when VIX stays in this tight contango form. Look at this chart here, and this is a great place for decay for people that are short vol, right? This stuff is decaying at an excellent rate, and I am pulling this up for you here. Let me just get myself out of the way here and pull this up for you. This is the VIX term structure, and we can see, look, it's 7% decay. This is even with a pop in the VIX, and this is just a very nice looking chart here as far as decay. 7% decay, that's per month, and thus it is very advantageous to be short VIX ETPs right now as far as decay goes. Now, it often occurs that the most decay happens in the most sort of risky times, and that's what we have, sort of a high risk, high reward situation going on in the VIX ETPs. And you're going to notice the decay most, it doesn't even look like it's decaying because VIX up, right? But if we stay at 7% like that, the stuff is going to continue to decay very rapidly, and it's not noticeable day to day, but it is noticeable month to month, and you're going to see it decay more and more as the VIX cranks up like this. So there is a big case to be short volatility right now. However, the contrarian view is that we can get the markets are volatile right now, and this stuff is accurately priced. So I'm laying off right now, even though that's a great number for decay. 6.88% contango means that the stuff is decaying by 6.8% per month. So if we were just to do some back of the envelope math, 6.88. So if let's just say $31 times. So essentially, UVXY is decaying by $2 a month. So all things being equal, this thing's going down $2 a month. So VIX in the same place, futures in the same place. Roughly in a month from now, this will be 29.18, not 31.18, and so on and so forth, month after month. So great decay situation. However, we don't know what the playing field is going to be after the election. So it's very... we like to say with the markets that nothing new ever happens in the markets and that everything's been seen before. And that is true to some extent, but The other point, of course, to be made here is that this election is a big deal, and we don't know what's going to happen. We don't know a lot about this. You know, there's already controversy stirring about mail-in ballots, about what voter suppression, et cetera, et cetera. So we'll have to wait and see what happens, but it is a big moment coming up for the country here, and it seems to me that this volatility is justified, and the VIX futures being 31 is justified. So I don't see a lot of edge in shorting this stuff now, even with contango at 6.88%. There, it took me a while to get that out for some reason. Okay, so I'm going to let you go here as we are about 13 minutes from the open. Once again, important to keep an eye on the Russell. Of course, we've seen, and people have talked a lot in the media about this, that the Nasdaq and the other indices are finally converging a little bit. You remember, we've seen the Nasdaq way out ahead of the rest of the market as far as the rally back. In fact, the Nasdaq is at the all-time high, whereas E-minis right now have not broken that all-time high yet, right? And the Russell, that's been a real laggard as well. But now, the last just session or two, we've seen Nasdaq struggling while the Russell and other indices are going higher. Now, this could be that people are saying, smart portfolio managers are saying, maybe it's wise, and this is you can make a case to go to your clients and say, maybe what we should do here is lighten up a little bit on our Teslas, Apples, and whatnot, and buy some of these other stocks that are, aren't up as much, maybe wouldn't go down as much if there's a problem, but let's take some of these great profits that we have in, your Apple, your Microsoft, your Google, and let's switch it into at least just a little bit into value. Let's find interest in some of the smaller Russell cap companies. And so we've seen this rotation out of the tech stocks, which have done so well, into some of these things that haven't done quite as well. It seems to me as almost a defensive posture doing this. And, when we have gold up every day, gold's down 780 today, but gold's been up a lot. And when we have all this bad news out there, there's people are trying to be a little bit more cautious. Now, fund managers want to be in with the returns. When they see all this stuff way up, they have to stay in a lot of these tech names because they need to justify the money they're being paid. And when you've got the market up, X percent, if you don't stay in these names, then you're going to lag the market indices. And if you're lagging market indices all the time, then it's hard to make a case as to why someone should pay you money instead of just buying an index fund, right? So that's the quagmire that a lot of fund managers are in. And it is quite a quagmire, I have to tell you, because and I'm glad I'm not a fund manager right now, because I would be lightening up on these stocks. I stand in awe at my father, who is able to just stay in everything, stay in the market all the time. And, he says, well, look, I'm not a trader, I'm an investor, and I just stay in everything all the time. But I still stand in awe of his ability to do so and just stay long all this stuff just all the time, because it seems to me like I don't want to be in this market right now with investments. It seems like it's done very well. That's great, but let's, how much higher is it going to go from here without a pullback or something happening? It just doesn't, I don't know, it doesn't seem to me. I would not be long this market right here. But, my father's had better returns than I have in the long run, so hats off to him for staying long, but I just can't do it. All right, well, I appreciate all the support as always. I love to hear your comments and feedback. Let's take a last look at the chat before I let you go. But yeah, looking in this market, I am looking to get short again, depending on what we see earlier or coming forward today. I am looking to get short because I'm very, very bearish here. But, what do I know? Who knows? We'll have to wait and see what happens. I'm interested to hear if you guys agree with that. Just pulling up my screen one more time here. And hi to everybody in the chat. The chat not very active today. Well, I didn't publicize at all that I was coming on, and I just kind of came on randomly, so that's fine. But hi, everybody. Best of luck trading today. Hang in there. Stuff's whipping around, so keep your deltas tight, and because if you leave stuff hanging out, you're going to get burnt. I had great trade yesterday morning in Lululemon where I just sold one naked call, like a $15 call, and the thing went down like $5-6, and then I was able to buy another call against it, and that was a great spread for a few $100 just kind of out of nowhere. But then I had a short delta, and the thing just went right back up in my face. So it's like made $300 on one call, lost $300 on another call, and I'm playing small and just keeping stuff tight to the vest, but it's just frustrating. But number one, don't lose money is the most important thing. If you can focus on number one enough, then you will make money. All right, so thanks for watching, and we'll see you next time. Best of luck today in your trading endeavors and whatever else you have going on.
You're watching Famous Dave on YouTube.